Hello everyone and welcome to This Week in the Markets. This week the non-farm payroll data suggests that the labor market in US is picking up strong momentum. Growth in the manufacturing sector has also accelerated after slowdowns in the last couple of months. In China, there is more evidence of a recovering economy as both the manufacturing and service sectors are expanding in January. The Japanese yen weakened again during the week as Bank of Japan's governor offered an early resignation, and in Europe, political instability triggered a profit take on recent rally. We'll take a closer look at this news in more details after our disclaimer. So information contained in this video is intended to be general advice only and should not be relied upon as financial product advice. Furthermore, the advice has been prepared without taking into account your objectives, financial situation, or particular needs. So you should, before acting on the advice, if you choose to act, consider the appropriateness of the advice having regards to your objectives, financial situation, and needs. So the non-farm payroll figures released last Friday suggest that the employment condition in US continue to improve at a modest pace. According to the first estimate of the January report, US added around 157,000 jobs last month. This was slightly below the analyst estimates of 165,000, but the slight miss was overshadowed by the large revisions in December's figure, which went up from 155,000 to 196,000. And if that was not enough, November's figure was also revised upwards by 86,000. And there were also strong upwards revisions to jobs in the first half of 2012. So all in all, it shows that the recovery in the jobs market is much stronger than most were expecting, and that is providing fuel to the current rally. The ISM manufacturing PMI also gave investors something to cheer about. This index indicates the health of the manufacturing sector and compares it to the previous month. A reading above 50 would mean that the manufacturing sector is expanding, while a below 50 reading means that it is contracting. So while analysts were expecting manufacturing in US to continue expanding at an ever so marginal rate, the PMI jumped to 53.1 in January, indicating a modest pace of expansion, and is in fact the fastest growth in the sector since April last year. The ISM non-manufacturing PMI, on the other hand, was slightly weaker than expected, but the rate of expansion, as you can see, remains quite high. The non-manufacturing PMI indicates the health of the service sector in US, which is responsible for nearly 80% of the country's GDP. So it is positive to see that the service sector is still expanding at a strong and relatively consistent pace. In China, the manufacturing sector there also appears to be improving, but the two separate surveys compiled by the China's National Bureau of Statistics and HSBC differed on the rate at which the country is growing. While the official survey shows that the manufacturing expanded slowly with a PMI of 50.4, the privately compiled survey by HSBC showed an accelerating pace of expansion with the PMI of 52.3. It is difficult to say which one is more accurate, although the official PMI is based on a larger sample. The HSBC PMI is more focused on smaller private manufacturers. So it is perhaps these private manufacturers rather than the state-owned firms that are currently driving growth in China. Whatever the case is, both the official and HSBC PMI agree that the services sector in China is continuing to grow at a rapid pace. The official non-manufacturing PMI came in at 56.2, which is more or less in line with the last few months, while the HSBC PMI, on the other hand, jumped up strongly from 51.7 in December to 54 in January, showing a pickup in the private sector as well. So these are yet more evidence to support the recovery in China. In Japan, the central bank's governor, Masaaki Shirakawa, offered to step down 3 weeks before his term is due on March 19, together with two of his deputy governors. This will allow Prime Minister Shinzo Abe to appoint a new governor who is more willing to adopt aggressive easing. Under the current governor, the Bank of Japan resisted pressure for open-ended quantitative easing in the last meeting, which disappointed the markets and strengthened the Japanese yen. With Shirakawa's early resignations, it means that Japan would not have to wait until May's rate decision meeting to announce a more aggressive and perhaps open-ended quantitative easing, which Shinzo Abe is pushing for. This news boosted the dollar-yen, which continued to making new highs during the week. In Europe, political instability there, in Italy and Spain especially, has taken a toll on the markets during the week and caused a sell-off on Monday. This is especially true in Italy, where the election is less than 3 weeks away, on February 24th. The former Prime Minister Berlusconi's party seems to have gained some support last week, which the market took negatively, as it means that there is a chance of the new government overthrowing the progress Monti has made on the austerity measure and balancing the country's budget. Nonetheless, for now at least, the center-left party is leading the poll, whose leader Luigi Bersani has promised to stick to the austerity measures and pro-European policies. In Spain, the current government is under much pressure as the Spanish Prime Minister, Mariano Rajoy, was criticized for corruption charges. Currently, there is no evidence of wrongdoings other than media speculation, and it just seems like the market is finding an excuse to take profit after a long run on the euro. The chance of the current Prime Minister getting kicked out before his term is due is quite slim at this stage, and we're not paying too much attention to it. Saying that, the Spanish and Italian bond yields have been rising in the last couple of weeks, as you can see in the charts here. So if it gets near the 6% and the 5% levels respectively, that could cause some concerns for global markets. So we'll be keeping an eye out on this, but for now, we cannot make too much conclusion from this volatile chart. And that's all for this week in the markets. In the coming week, the most important data will probably be the Chinese imports and export numbers, and the consumer price index, which measures the inflation in the country, and of course the Chinese New Year, which would start this weekend. So until next week, on behalf of the Trading Pursuits team, we wish you all profitable trading.